Absolutely. So I'm the head of private clients for Swan Bitcoin, and we're one of the leading Bitcoin-only brokerages, and we run one of the most robust and widely used concierge kind of high net worth private client teams. So we work directly with high net worth investors that are wanting to purchase Bitcoin, but also get educated, get their questions answered, get their trusts onboarded, business accounts, multi-sig, IRAs. So we do all of this. It's the leading white glove service in the industry. And we're also one of the largest mining companies in the world now, too.
All right. And Austin.
Yeah, thank you for the invitation. I'm co-founder of Layer 2 Labs, and Layer 2 Labs is a Bitcoin software development company that builds software that allows Bitcoin, the asset, to move to other networks that have perhaps different features than the core Bitcoin network. Prior to that, I had been in the Bitcoin exchange industry for over 10 years.
Yeah, well, it's interesting because the three of you represent different areas within the digital asset space. So I want to get your thoughts on where we are with Bitcoin now. Of course, it's a relatively young asset class, and really it's been fascinating to see how it has matured. And of course, the big news this year, getting the approval for a US spot Bitcoin ETF, just is continuing that momentum. So Austin, what are your thoughts in terms of where we are right now with Bitcoin?
We're just getting started with Bitcoin. Bitcoin's the best performing asset class over 15-year period, over 10-year period, over 5-year period. I forget, I should have refreshed my numbers, but if you hold Bitcoin for more than 4 years, you're averaging like a 90% year over year return. Bitcoin is the scarcest asset in human history. It's scarce beyond the physical realm. Gold has had a monetary premium for 1,000 years, and yet still is inflated 1 to 2% every year, at least. Bitcoin has artificial scarcity, something that we've never encountered. It's infinitely divisible. It's infinitely durable. It's the most portable asset on Earth. You can memorize a short phrase and hold billions of dollars in your brain. It's like nothing the world has ever seen before, and I believe, could catalyze an economic golden age that humanity's never seen ultimately.
Yeah, and I think I think the total market cap for Bitcoin is a little over $1 trillion right now. You put that in context of global asset buckets, and it's minuscule, right? Like you have some $30 trillion of residential real estate in the US alone, not counting commercial. You have individual stocks on the US stock exchange worth $3 trillion, $2 trillion. That's just one company. While kind of the ticker price of Bitcoin, approaching $70,000, I think, today and soon, may seem like, wow, Bitcoin has reached such an expensive valuation. It's important to realize, like, part of the reason that number is so high is because there are so few Bitcoin. And so you look at the overall market cap and valuation of this asset, it's tiny. And that's good news for investors because there's a lot of growth to come, is our view.
Yeah. And Matt, would you say that a lot of this demand has been driven as of recent due to the institutional adoption?
Yeah, so as you know, BitGo really sits at the center of the institutional ecosystem, in the market. We deal with a lot of the buy-side firms. So those are, venture firms, hedge funds, asset managers, more recently RIAs. But we also interface with the different exchanges and liquidity providers and market makers out there. So we do have a pretty good vantage point in terms of both kind of seeing the flow and then also understanding anecdotally, where it's coming from. I think from a macro perspective, Pandora's box is now open. Myself, Steve, and Austin, we've been in the space for, over 5 years and, have obviously been saying the institutions are coming and that a wave of capital has been, hopefully arriving into the space. It's finally here. I think some of the largest asset managers in the world are now, offering Bitcoin. You look at BlackRock and Fidelity. These are multi-trillion-dollar asset managers that are now really institutionalizing the sales process of getting clients to buy Bitcoin in their portfolios. That cannot be understated as it pertains to really the long-term adoption of Bitcoin. But if you look at even at the short term, right, you see some of the flows. The flows don't lie. I think BlackRock did 790 million of inflows a couple of days ago, which was a record-setting day. And I think, in total now, the ETFs hold about $20 billion worth of Bitcoin in just about under 60 days of trading. So, there's clearly new demand out there, and a lot of that is from the institutional side. And I think from our vantage point too, we're seeing the same thing on, the trading side, and just the different names that we're servicing from a custody and settlement perspective as well.
And I think one of the takeaways here as well is like, yes, there's been this astronomical increase in flows into Bitcoin, the asset, right? Like Matt said, $700 million yesterday for BlackRock, billions and billions over the last few weeks. There's that story, which is direct purchasing of the asset. And then there's another story that these are arguably the most successful ETF launches of all time along several metrics, like the trading volume in the initial time period, how fast they got to some of these inflows and AUM targets. Extraordinarily successful. And this tells us two things. One, that there is enormous demand for this asset, Bitcoin, among traditional finance. And two, it's kind of the shot heard around Wall Street. And what I mean by that is all of the banks, all of the financial companies, all of these different players are looking at the success of these products, and they're thinking, how do we get a piece of that? One of the stories that came out shortly after the ETF launch was banks were lobbying, I believe it was the SEC, trying to change some regulation that prevented them from engaging with the ETFs. They saw the opportunity there, and they said, whoa, we're currently prevented from engaging with these products, but we want to because that's where the money is. And so the success, not just on the price of Bitcoin, the asset, but these ETFs as financial instruments, is going to pull so many providers, so many institutions into the space. And then one other detail is that, previously, if you were on Wall Street and you were working for one of these firms, Bitcoin was kind of something that was happening over there. And yes, people were aware of the huge returns that were made by people in the industry, but it was something those guys did over there. It wasn't something the guy you were being benchmarked against was putting his portfolio in. But now it's something that's inside the house, and the firm or the trader that your performance is being comped against, that you're being compared against, just like this year, right? The guy that was overweight NVIDIA stock that had 8% of the fund in NVIDIA, he mopped the floor with you. Like literally that was the trade. You had to be overweight NVIDIA. And anybody that did outperformed, and anybody that didn't ended up chasing because of these comparisons. Bitcoin's now going to be in that bucket because traditional finance can own this asset and can participate in it.
Yeah, what I find interesting too, having covered the digital asset space since 2018, which is kind of a long time from a media perspective, the way the conversations have shifted from 2018, I would say the inflection point for myself was like 2021, later 2021, where we weren't talking about altcoins, we weren't talking about trading, we weren't talking about every wallet and exchange that came on the system, but it really shifted to digital asset infrastructure. The conversation shifted to regulation. It became more institutional. The outliers kind of, went by the wayside, despite all the, some of the blowups that happened in between. But I really feel like the epiphany moment, at least for myself in terms of coverage, where it was infrastructure, regulation, institutional. It feels as if the last 2 years that conversation has shifted, and now it's kind of like proof of concept now, if you will, where the institutions are firmly rooted. Even when you think about custody, these are institutional terms in my mind. So, your thoughts around that, have we kind of come over that hump, if you will?
Yeah, I'm happy to kick that one off. I think from BitGo's perspective, we think that narrative around really creating a better infrastructure, a risk mitigated infrastructure coming out of the collapse of FTX in 2022 and some of the major challenges the space saw just a year and a half ago is a critical part of making this cycle and this time different. And I think that, one of the core philosophies that we have at BitGo is that there really needs to be a focus on creating institutional grade infrastructure. So part of that, we recently launched Go Network, which is our effort to really intentionally separate assets under custody held in a bankruptcy remote trust, in cold storage at BitGo that, is not, cannot be tampered with, and it sits there in a regularly compliant manner, and separating that from trading, right? So in the past, you used to send assets directly to exchanges, which is just really not kind of an institutional grade market structure. And now what we can do with Go Network is really keep assets in cold storage at a qualified custodian. So, any large asset manager that needs to comply with SEC rules has to use a qualified custodian for custody. They can do that while still accessing liquidity from the exchanges through Go Network. So we've now enabled clients the ability to, let us safeguard your assets, and we've built the pipes to really be able to delegate and broadcast those assets to the exchanges so that they can still trade and get liquidity there. So, that's just one example of I think an upgrade of the whole ecosystem and market structure. There's a lot of things like that, that are happening around, but I do think that custody trading, settlement, these are very important concepts now, and folks are giving a lot more thought to them than they were, a year and a half ago.
Yeah.
And I think,
I'm sorry, go ahead.
yeah, and I think an important detail on the existence of this infrastructure that Matt's talking about is that for people that are kind of new to this space, they're seeing these ETF numbers and they're seeing, oh, $500 million today in inflows, 700 million that BlackRock took in. It's important to note that there is a whole infrastructure ecosystem that exists outside of this ETF space. And you're just seeing a slice of the market there, one that's highly visible. And it's great because people can see some direct numbers and see concretely the demand that there is for Bitcoin. But it's important to understand that, we run a brokerage firm. I work directly with high net worth investors. We, provide a concierge service. The volumes have been incredible, and the interest from investors in getting direct exposure to Bitcoin, not ETF, not paper exposure, but direct exposure. There's huge demand there too. And it's something where if I were to estimate, and there's no way to really quantify these numbers, so this is really just a guess on my part, but there's at least 2 to 3 times, if you're seeing 500 million in flows in the ETFs, I would guess there's 2 to 3 times that happening in this whole ecosystem outside of the ETF. So for people that are kind of new to this space, that have gotten brought in by the ETFs, just something for you to be aware of.
Austin?
Yeah, I'd say that's very well put. And we're on the precipice of a wave of financial and even technical innovation in Bitcoin. It's still a novel asset, and this is still a new industry. But I believe very soon it is going to be considered conservative to put 1, 2, 3% of a portfolio of your investable assets into Bitcoin. And the idea of not being exposed to this as it continues to outperform every asset class on Earth year after year. And I believe we have potentially decades more of Bitcoin outperforming. It will be seen as just kind of something that every sovereign wealth fund, every family office, every pension fund, every pool of capital needs to have exposure to. And it won't be seen as some sort of a crazy bet, some sort of dice roll. It will be seen as conservative. And I think we're already starting to get the first inning of that vibe shift, of that mindset shift.
All right, Austin, stay with me for a moment here. We have just about 5 minutes, and I do want to touch on halving. Your thoughts going into that? Is Bitcoin historically behaving like it has during past halving cycles? What's your expectations there?
Well, it's actually outperforming the previous halving cycles when it comes to the speed at which it's the price is moving. Historically, we'd had a little bit of appreciation into the halving, and then 3 to 6 months after, we would have a big price move, and I think probably potentially due to the ETF unlocking so much capital that was previously gated out of Bitcoin. That's happening more quickly. And having it's a very big deal because you have the amount of new Bitcoin released onto the network will be cut in half in a just a 60 days time from now. And when you have this type of inflows into these ETFs and into the asset, that it could potentially, really move the price, because Bitcoin's one asset that does not respond to demand. The supply does not respond to the demand, almost unlike anything else on Earth. So generally speaking, it's extremely bullish.
Yeah, I would agree with that. I think you're seeing really the coming together of two forces. It's like the perfect storm, when you have this brand new wave of real institutional demand. on the ETF side, and obviously, the predictable halving of Bitcoin on the supply side. And when you put those two things together, you really do get a cocktail for a supply squeeze to potentially happen on the market. And I think you're seeing that happen right now, just looking at the velocity and the acceleration of price in BTC. I also think it's safe to say that maybe retail is starting to, come back into the market, but really only in the last 30 days. And so, in terms of using, history as kind of the context for what's to come, I think there's a lot more participation from retail that has to happen before we're at the end of this cycle. I think we're just starting to see some of the indicators of retail participation now. If you look at, certain assets like Doge or Sheeb, or some of the classic kind of retail long tail assets that are being bought in the market. But just looking at things like funding rates, I think there's a lot more room for retail to kind of jump on this, which could, increase, right, just the net new demand in the market when you have this predictable, supply, decrease coming, obviously, on the new issuance in the market.
And following this halving, Bitcoin will have the lowest inflation rate of any currency on earth, lower than any fiat or government currency, and also very importantly, lower than gold. And so it really is in a league of its own as far as kind of an inflation hedge.
And Stephen, last word here.
Yeah, and I think something for people that are listening to this that are again are newer, that haven't spent a lot of time with Bitcoin over the years, one of the unique facets of Bitcoin is that there is fundamentally no ability for producers to bring new supply onto the market when prices go up. Every other commodity in the world, right? If gold price goes up, if the copper price goes up, even if share prices go up in stocks, the company can issue more shares. The gold miners are incentivized to mine more gold. The oil producers incentivized to produce more oil. Bitcoin is, to my knowledge, the only asset on the planet where that new supply is fundamentally fixed and inflexible. And so the miners, no matter how high the price of Bitcoin goes, they can't increase the amount of Bitcoin which is brought to market. And this is a really unique trait that maybe may sound small, but has profound implications, for an asset like this.